The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone around the world. How's everyone is doing this beautiful Friday afternoon? So how's everyone is doing today? My name is Eric Morera. I'm the founder of Elliott Wave Forecast. And we're going to have a lot of fun tonight, right? This afternoon for me, at least. So how's everyone is doing this Friday afternoon? That's great, great, great. A lot of traders here tonight or this afternoon, and we're gonna start in about 2 minutes to allow all the registered participants to be in the seminar. But it will be very interesting. I'm doing great. I'm doing great, guys. I'm doing great. To be honest with you, I'm doing great. So this seminar is going to be very interesting for, and it's going to be a lot of new things for most of you guys. We're guessing that most of you guys are Elliott Wave participants. In other words, you use Elliott Wave one way or another in order to trade the market. And we're going to come out today. Thank you, Bernkat. And we're going to come out with a lot of new ideas to you guys that you probably never have heard of before in any place around the marketplace. So we are still waiting a little bit for the register to enter the seminar, and we will start soon. Right? Always getting to the weekend with new ideas entering next week, which, by the way, will be very interesting across the marketplace. Let's give it about another 30 seconds there. And we're going to start. So I hope that everyone is doing great. Right? Yeah, the seminar will be recording and it will be posted on our homepage, and also will be posting on the social media, YouTube and everywhere. Yeah, that will happen. Yeah, we are talking. Yes, you guys can. If you are not, hopefully, if I say something, you're probably gonna hear it neither. But yeah, we are live and talking. Yes. No problem, Terry. We're almost ready, guys. Waiting for a few more people there. I got a lot of questions here. I'm gonna share one. Oh, Frederick, it's better if you repeat the question at the end of the seminar, because otherwise we're going to start talking about something at the beginning that it should be at the end. It doesn't mind if you don't mind. That okay? So better you ask the same question and we answer to you at the end. All right, guys. So let's start the seminar. Like I say, my name is Eric Morera. I founded Elliott Wave Forecast. Most of you guys know about us back in 2005. We've been since then growing and forecasting the market, and more than anything, we have been improving Elliott Wave from the original version of Elliott Wave to how we apply it. It is undeniable that the world is not the same that it was 100 years ago, and you cannot trade the same way. So today, using the new system that we have created in Elliott Wave Forecast, we're gonna go and we're gonna answer a big question that many waivers might have across the market, right? Most of you guys are seeing the world indices for it, in my view, and a wrong way to look at the market. And I don't know sometimes why. Most of the Elliott Wave persons, they are bearish the market. They have been expecting the indices to crash since 2009, 2000. After the crash, they expecting more crash, right? And most waiver, they have been waiting for a crash, a crash, a crash. And I do recall, like today, those calls for the S&P to go to 200, right? So today we're going to answer the question, because no question that there is a very interesting stage of the market, right? When we are today, right? We are at a very interesting stage that if you don't know what you're doing or you have a very good system to understand what's happening, you might get lost and lose a lot of money, right? So that's what we're going to do today. We're going to answer the questions. Are the indices in a super rally or they're going to crash, right? So because of that, we're going to go and we're going to have a few points to cover, right? So first, the first point, we're gonna be explaining to you guys what are the possibilities, right? But before, we're gonna be telling you guys what is a five-way advance. Most of you guys know that's a famous Elliott Wave theory. What is a five-way advance? We're gonna tell you guys what is a nest in Elliott Wave. What are the difference between five ways or a nest? We're gonna be explaining it to you guys what is a cycle and the degrees in the marketplace. We're gonna be telling you guys how the SPY, the FTSE from UK, and the Hang Seng, they are showing the same trend, but they're showing a different Elliott Wave count, right? Or Elliott Wave structure, better say. We're going to talk about the transportation sector, Southwest Airline, American Airline, among other things that we're going to be covering. We're going to relate also, thank you and everyone there, and yet everyone. We're going to be talking also because most of the traders, they only trade either one group, let's say indices, one sector, let's say technology. They trade Forex, they trade commodities, but they miss the whole point, right? Which is that you have to be a trader of everything because everything relates among them, right? That's a point that most traders honestly missing, right? Most trading ending missing that point. in our company, an analyst needs to be an analyst of everything, and he needs to understand everything. He needs to understand what does it mean that the yen pairs rally, and how a rally in the yen pairs does affect the dollar pairs, but also affect the indices. He needs to understand the dynamics of the market, because I have seen many traders and even services laboring the euro yen higher and the euro dollar lower. Ain't gonna happen. And then I seen the same services or traders laboring a super crash in the indices, and on the other hand, they're calling the yen pairs or the dollar yen higher. Ain't gonna happen. So we're gonna cover a lot of instruments that relate to the SPY or S&P or ES or world indices, in other words, and we're gonna let you guys know what is our opinion. And then at the end, we're gonna give you the most likely path, why we're favoring one over the other, and the conclusions, and what should be happening for years to come, right? That I want you guys to understand. The market always ending doing what most people are not expecting. So trading is a very complex field. It's a great area for opportunities, no question asked. If you know how to do it right. We have in Elliott Wave Forecast have incorporated a system which is based. We use Elliott Wave, right? But we use cycles, systems. We use a lot of correlations. In first, second degree, we use RSI, what we call an RSI system. We use a distribution system. We use how we call a dynamics of the market to be able to come out with conclusions. Because how we're gonna prove it in this seminar, if you only look at the at the SPY, S&P, or the Dow Jones, and also the DAX, you might be misleading by Elliott Wave, right? You might be misleading by Elliott Wave, and I want you guys to know that, right? You might be misleading by Elliott Wave if that being the case, right? So that's what we're gonna cover. I guess knowing my passion for this field, I'm thinking about an hour and a half, but I know myself, I'm gonna stand, right? So that's what I want you to be, and that's what we're gonna be doing today. So first, an Elliott Wave structures, right? What I'm gonna do now is explain to you guys what it is: a five-way structure or a nest. They are very similar, but they are internal. Or we have discovered over the years that even though that they looks very, very much alike, right? They look very much alike. They are not the same, right? And like I say, since 2015, it's amazing. It's almost 16 years since we started, and we got our first member. We have developed a lot of new things, right? And we have applied computers to Elliott Wave instead of keep writing only with Elliott Wave, which doesn't work by himself in a straightforward way, right? So I'm going to explain now what is a five-way structure. Most of you guys know that this is a five-way structure in the market. It's a subdivision of 5 waves, which goes in different degrees. 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5, 3 ways back, and another 5. The 1 with parentheses, the 3 with parentheses, and the 5 here, those 5 are with the trend, right? Those 5 are with the trend, and they always comes in subdivisions of 5. That's why you see 5, 5, and 5. Then the market put back in 3. That's why every time that you see a 5, you might be expecting a putback. That's the market nature. That's how the market works, right? So eventually here, those are the 5 wakes, and then these are the main rules of the 5 wakes. An impulse, like I say, and is a subdivision of 5. Wave 1, 3, and 5 are impulses themselves. So consequently, they have to be subdivided also in 5 wakes, right? So wave 2 cannot retrace more than the beginning of wave 1. Wave 3 cannot be the shortest. Wave 4 cannot overlap with wave 1 or never more than 50% of wave 3 unless it's a leading diagonal, which is an Elliott Wave structure that is subdivided 5, 3, 5, 3, and the 4 touch the peak of the wave 1. And wave 5 needs to come with momentum divergency in the RSI. So these are the main rules of the previous slide right here, right? Each one subdivided in 5, wave 1, wave 3, wave 5. Wave 4 cannot touch the peak of wave 1 in a regular impulse. And wave 2 cannot go below the beginning of 1. And wave 3 cannot be the shortest of the 3 impulses with the trend. And wave 5 here needs to come with momentum divergency against the peak of wave 3. That's what a 5 waves looks like and the rules of a 5 waves. A straight question. Do you guys understand what is a 5 waves in the market, right? Most of you guys understand what is a 5 waves across the market, right? Everyone understand that. It's very important that you guys understand what is a 5 waves, because when we're going to start showing the charts of the S&P, right, you guys need to know and identify the 5 waves. What we're doing here now is showing you guys how they looks like, so you guys understand what is taking place across the marketplace, right? That's the idea. Now, we're going to keep going, and we're going to look at some Fibo structures here. For example, wave 2 retrade 561876 or 85.4 of wave 1 most of the time, and depending the stage of a wave 2. In other words, if we get back here, the wave 2 in the first leg usually is deeper than the wave 2 or wave 3, right? Why? Because usually the wave 1 or wave 3 are already to the highest or wave 1 in the highest degree. That's why you need to know what about degrees in order to trade the market, right? Because you need to know about degrees. What I'm saying is that we mentioned that wave 2 usually retrade 561876 for or the distance traveled by wave 1. But there are 2 degrees, if you guys understand here. This is a wave 2, right, Terry? This is a wave 2 here, correct? This is a wave 2 also here. But the wave 2 or wave 3, this wave 2 usually is retracement is shorter than this pullback. Why? Because right here, there is a trend coming down here. So right here, the sellers want to push lower. Right here, the sellers give up. So the wave 2 or wave 3 is most of the time based on profit taking instead of a trend. Remember, a trader needs to take profit, and the computers that trade this market, they need to take profit, right? Now, wave 3 typically is 1.6 extension or 1 and 2, right? It can extend, right? It can extend more than the 1.618. No question asked. It can extend more than the 1.618. It can go to the 200, the 2.618, and on and on and on in the Fibonacci sequence. Now, wave 4, which is usually the 14.6, 23.6, 38.02, but never should pass the 50% of wave 3. Based on the book of Elliott Wave and the theory of Elliott Wave, right? As far as wave 4, do not touch wave 1, it's great. We can label as an Elliott Wave, we can label it there as a wave 4. We look at it different in Elliott Wave forecast. For us, if we are sure that the right side is higher, and that's a wording that we use a lot in Elliott Wave forecast, the right side. In Elliott Wave forecast, we do not trade, absolute, do not trade against the right side unless there is a sequence justifying more extension within the correction. Another thing that we don't do in Elliott Wave forecast, ever, we don't pick tops and bottom. We always get it wrong in the top and the bottom. And we're proud of that, right? For example, 2 or 3 months ago or 2 months ago, we were telling the members, we were doing the live session, and we were telling members a huge warning sign in red about the S&P, SPYES. We were telling them a correction is coming, a correction is due, it's gonna happen because of the Nikkei, it's gonna happen because of the Nikkei, a correction is coming. We knew that the market going to put back, 100% sure that the market going to put back. And we didn't get it right at the top, because we don't need it to get it right at the top. We have a distribution system that the moment that the top is presented, we call the top, right? But we always gonna push the right side. So if you know, getting back to this, that the wave 4 here goes, most of the traders are picker. They love picker. They always late to the party, Hector, like I say. So if the wave 4 becomes too big and you're sure that the right side is long, then instead of calling a ugly wave 4 big, you call it next. So we have done a lot of things, a lot of new rules to make Elliott Wave great, as you guys can see, to make it work. Because as it is presented in 1930, yeah, it's a great discovery, a great observation, no question asked. But the bottom line is that it doesn't work completely that way. Now, wave 5 needs to come with momentum, because that's the nature of the wave structure, right? And wave 5, people start taking money out of that. And wave 5, technically, the new trend is already exhausted, and there comes the retracement. So wave 5 for us in Elliott Wave forecast, as a rule, it needs to come with momentum divergency. So these are the basis rule. This is how an import looks like. Everyone should understand this by now in Elliott Wave forecast, right? Everyone should understand this by now in Elliott Wave forecast. Right here in the seminar, my bad. Any question about the 5 waves? I don't pretend that you guys become expert, right, of Elliott Wave in this seminar. I just want you guys to understand right here the article of what a 5 waves looks like, right? The article of this, how it looks like, that how the wave 5 needs to have momentum divergency, how each one is subdivided in 5, and things of that nature. That's what I want you guys to understand. Now, let's keep going right here. This is an impulse, wave 1, 2, 3, 4, 5, to the outside, to the downside. Everyone knows that. To the outside, to the downside, right? And then this sometimes comes with one of the three impulses always get extended. This is the first way impulse to the outside, to the downside. The third way is the most common, that the third way get the standard one. When it comes to commodity, usually it's the first one. Don't ask me why, but that's how it works. Or the wave 5. This is a 5th-way extension. And this is one in which you don't have an identified extension. So eventually here, what am I saying is that there always going to be one that it gets extended. And the one that is extended, it comes with a huge characteristic within their own nature, right? Which is that the extended one, it create a nest. And that's when things gonna start getting very interesting, right? That's when things gonna start getting interesting, when we're gonna start talking about nest, right? So this is the third way extension, and I'm gonna give you guys here the first hint of what is a nest. This is a nest. 1, 2, 1, 2, 1, 2. Then the break, right? 1, 1, and 1. 3 wave 1 together. But from the lows you have 1, 2, 3, 4, 5, right? Everyone see my point? 1, 2, 3, 4, 5. 3 waves 1 together, but also 5 waves. And that's why something that we developed in Elliott Wave forecast, and most of you guys know us either. But the 3, 7, and 11, everyone knows that. We own the copyright about those things. And also because of the blue boxes. Everybody knows the famous blue boxes that we keep showing to you guys in the daily basis, right? So I want you guys to understand, Hertor, Terry, everyone there, William, a lot of people, that from these lows right here up to here, how many waves do you guys see, honestly? 1, 2, 3, 4, 5. How many? Anyone there? Terry said 5. He's correct. I won't say 5. He's correct. All right. There are 5 waves, right? So when you see 5 waves in the market, that's very bullish or bearish. Bullish, if you see 5 waves to the upside, it's bullish. If you see it to the downside, it's bearish. So 5 waves needs to get resolved either in a nest of just 5 waves, right? So these 5 waves, even though they look 5 waves, can be 5 swings. And that's when we are different, because you don't hear this language for nobody on this planet. Because most people, they see 5 waves and they start selling. Because the Elliott Wave theory say that after 5 waves, the market will put back, right? That's when most people are wrong in this. Everyone. That's when most people get it wrong, right? That's when most people get it wrong. So this is a third way extension. 1, 2 with a cycle, parenthesis, nothing. Then it goes 1, 2, 1, 2, 1, 2, 3, 4, 5. You get 5 here, and then you get a 4 and a 5. So I want you guys to understand how a nest looks like. Everyone understands the nest, right? That's a nest. It's a series of 1, 2, 1, 2, 1, 2 with an acceleration higher. Now, in a nest is a regular impulse, but with a lot of subdivisions, right? But the nest is when most waivers are missing the point of the nest in current market conditions. An extension happens in the subdivision of 1 or 3 or 5 using a nest, like I showed you guys in the previous chart, right? Most of the time, like I say, 80% of the time, especially in the indices and stocks, the nest happen in wave 3. Same rules apply for an extended nesting impulse that it needs to happen for a regular 5 waves impulse. Why? Because in the nesting impulse, technically a regular impulse is 5 waves. Let's say a regular impulse in Elliott Wave is considering the one that it goes wave 1, wave 2 retrace 50% of 618 of wave 1, wave 3 ends at the 1.618 of 1 and 2, wave 4 retrace 3802 of wave 3, and wave 5 ends at the 1.236, 1.618 inverse of wave 3 or wave 4. That's the regular impulse. Now, when the nest appear, technically one of the subdivisions gonna break the Fibonacci sequence that I mentioned to you guys. And then the market is gonna nest. And instead of showing 5, it's gonna extend to 9, 13, 17, 21, 25 subdivisions within the wave that is extended, right? Because if we get back here, right here, there is 5. It's not shown there, but there is 5. But if you count from here up to here, you have 1, 2, 3, 4, 5, 6, 7, 8, and 9. You don't get 5, you get 9. Like I mentioned previously, the extended sequence, right, always go past the 5. It goes to the 9, 13, 17, 21, 25, 29, and on and on and on, and incrementals of 4, right? That's how it works right there in the nest. Then it's the same relationship in the pivots that explained it in the 5 waves. It's just that when extended, it's gonna break the 1.618 to the outside, right? Everyone with me so far, right? Any questions about, everyone knows the difference between the 5 waves that it ends after 5 or the nest that at some moment it looks like a 5, but then it becomes 13 because it cannot be 9. 9 will be the one in the middle, but at the end, the one that nesting gonna be 9 at least if it's a double nest. But then 5 is gonna become 13 to end the higher degree cycle in 5 waves. Most of you guys understand the concept, yes or no? Right? That's great. That's great that you guys understand it. That's beautiful. Great, great, great. All right? Now, a trader needs to know not only what Josh explained, and the reason why we're explaining this is to allow you guys to understand everything that I'm going to show later using the market, because this is all theory, right? This is not the real thing. The real thing is coming in a few minutes, right? So a trader needs to understand that the market do not run forever in one side, right? If you guys do recall back in 2011, who, at least in the States, right? You were driving by your city, right? And you see people trying to buy gold, right? People want to buy gold, silver, commodities back in 2011. People thought at that moment that the Aussie dollar is going to go to the moon back in 2011, right? Anyone remember that? When gold was very bullish and it rallied tremendously and it was trading at $1,800, ounce, 1900. Everyone remember that, right? So the cycle ends and gold pull back, right? So the market technically trade in cycles. Why? And then you need to think about it, which is what most people don't think about it, which is that the market, there are two sides of the market, right? There are two sides of the market. There are the buyers and the sellers, right? And everyone has equal opportunity, right? So another thing is that this market is ruled by the few, not by the most, right? So eventually there, what I'm trying to say is that because it's ruled by the few, when they take profit, the market feel it. So the cycles won't go forever, right? The cycle won't go forever in one direction, right? The market won't go forever in one direction. Usually the market advances in one direction, then the market does retrace or put back, right? So because of that, we need to understand that there are always cycles. And the cycles does create the degrees, because there are degrees within the cycles. Like if we gonna look at this, take a look. When a cycle is in place, the trend within that cycle stays the same. We were telling members in Elliott Wave Forecast, I was yelling them every single morning, because in Elliott Wave Forecast, we interact a lot with members, right? We do have 24-hour support when members can ask questions about specific situations or structures or movement in the market. And we do start doing live sessions at 6 a.m. in the morning, and we finish at 1 p.m. Eastern time or New York time in the afternoon. So it's like 7 hours. It's like 7 hours of continuous sessions, right? Because the market is dynamic, and we believe in that. And I was yelling to members on Elliott Wave Forecast. I always do the daily session from 10:30 in the morning to around 1 p.m., which I cover in the group one. And I was yelling members, the cycle from October 2030 across world indices is coming to the end. It's coming to the end. Same early August, when I saw the 5 waves, I was telling them the pullback is imminent. The pullback is coming in every single day until it happens. That's where we are now, right? That's where we are right now. So the cycle always have the cycle. The cycles always have a beginning and the end. And as far as it's alive, you keep buying it. That's the way it is, right? That's the way it is. So that's the way it is right here. When a cycle ends, you always expect a correction in 3, 7, and 11, which is the nature of the pullback. or the sequence of the correction. The cycle generally ends after 3 sweep and equal legs of the and 100%, 1.3, the 3, then the 7 and 11. A bullish cycle is a sequence of high, higher, highest, low. A bear cycle is a sequence of lower, high, lowest, low. There are different degrees, long, medium, short term. And the RSI and the trend line channel can be used to determine a cycle, beginning of end. In a simple rule, we got something more complex, right? Which is the distribution system, which is a combination of indicators that calculate the speed with the distance to travel. So that's more or less the rules within the cycles. Then right here we have what a bullish cycle looks like: a high, a highest low, a high, high, a highest low, and a higher high. This is 5 weeks, and that's what a bullish cycle looks like, right? Now, I want to show you in this the different degrees within the cycles. We have this cycle here in which we highlight the subdivision within the red, right? Now, right here, we highlight the subdivision within this cycle. And right here is the whole cycle. So if we go from the back to from the end to the beginning, this is a cycle of 5 weeks in purple, right? Right there. Everyone see that, right? One, right here. 1, 2, 3, 4, 5, right? Everyone see that, correct? Right here. That's a cycle. Now, this cycle has 5 main subdivisions in blue. 1, 2, 3, 4, 5. This is a degree, and this degree in purple has 5 degrees in blue. Everyone see that? Everyone understand that, right? And then this degree in blue has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, and 17. Subdivisions, and let's call it in the lighter blue right there. So 17, 5, and 1. What about that? Have you guys ever heard about this way? Because I know most of you guys have Google Elliott Wave, read the book, and on and on and on. This is not covering the blue in this way, right? But if you don't do it this way, you won't be able to apply Elliott Wave, the Elliott Wave theory. Because then you're trading, any of you guys, honestly, any of you guys drive a car from 1930s. I know I drive it because I was born in Cuba. And for you guys to know, in Cuba, most of the cars are pre-1959. So in Cuba, you get a lot of those cars. But believe me, they have nothing to do with the engine that you drive today. Nothing to do with it, right? Nothing to do with it. They don't ride the same. They don't feel the same. They don't touch the highways the same. I mean, they don't run the same. So Elliott Wave cannot be the same as it was in 1930. It is not the same to fly in a plane from 1930s that fly in a 777 nowadays. It's not the same. So Elliott Wave cannot be the same. So as a company, as a service, or as a trader, you need to implement new techniques to make the Elliott Wave theory a much better place. Everyone got my point, right? So that's why most of people use Elliott Wave, and what they do is, honestly, is giving Elliott Wave a bad name, right? Because they keep trading the fight. What I'm explaining is my own development, Terry, that we have done this in Elliott Wave forecast. We have developed this in Elliott Wave forecast. This is knowing the book and anything that you find in in Google, anywhere in the internet, or in the book, or whatever you want to look at. This is different. This is different. This is our own creation of these concepts. And that's what makes us different than the rest of the Elliott Wave servers that most of you guys know also, right? So these are the different degrees of cycles, right? These are the different degrees of cycles here. Allow me 1 second. I'll keep going here. So the ABC, or a correction in 2 or 4, is a retracement of the first and the 3. Now, this is an Elliott Wave theory. When we say 3, 7, and 11, and I'm sorry, guys, you are not able to see the questions. I will try to copy and paste, right? I will be covering the main subject, but you need to understand this first, Ken. Otherwise, you will not understand what I would say and why I take a side, right? So these are the different degrees based on the Elliott Wave theory. It's called the grand supercycle, the supercycle, cycle, and it goes from the highest degree, we take centuries, to this degree that it can minutes in an hour or 5 minutes charge, right? So the whole point here for you guys is, now when we're going to start the good stuff, is what's coming next. But you need to know by now, because if I go straight to what I think, for me, it's going to be as simple as 1, 2, 3, because I do it for a living. I do it every day. I develop these concepts. Yes, I learn the basis from the book or from Google, whatever. But that's not enough for me. That's not my nature. I cannot be a follower. I have to be a leader in my life. That's who I am. So I develop all these things to make it better, right? So you guys need to know now what is a nest, what is 5 weeks, and why the market has cycles. Because market makers take profit, right? So now we're going to start answering to you guys and making the point as a lawyer, right? What's coming next? Does the index is going to crash and the world is coming to the end, as everyone is expecting? Or that the market is going to enter the biggest rally ever seen by human nature in the indices? That's what is coming next, right? Because that's the way it is, right? Right? That's the way it is. Now, we're going to use, like I said earlier, the SPY, because technically the main idea is about the SPY, the world indices, right? The S&P, SPY, and on and on. We're going to make a point about the FTSE, the Hang Seng. We're going to talk about American Airlines. We're going to talk about Southwest and the transportation sector, which is very, very, very interesting, right? Very, very, very interesting overall, right? So this is, then we're going to cover what is the most likable path and provide the conclusion. No, I won't be covering Nifty here, no. All right, so let me show you guys some charts here. And we're going to start with the SPY or S&P, whatever you want to call it. It's the same price action, just different name. This is SPY on the monthly chart. This is the grand super cycle. This is from when it was 0 to now. What does it look like right there? Honestly. It looks like a 5 waves, right? It looks like a 5 waves. Don't you guys agree? If I get back and I show you this, you can say 1, 2, then you have 1, 2, 3, 4, 5 in the wave 3. Then you got 1, 2, 3, 4, and a 5. Correct? Now, these 5 waves in the S&P there had waivers and professional traders and services crazy because they think that the market is going to crash like there is no tomorrow. Don't you guys agree? There is an impulse there, no question asked, right? Now, when the market put back in 2009, it was here. The market correct. At that moment, right, I remember like it was today, you got an impulse and the market correct, right? So what was the grand super cycle? Remember, the super cycle in Elliott Wave is the highest cycle possible. So this was a correction of the grand super cycle, correct? Everyone see my point, right? Everyone see my point, right? So what it was the grand super cycle at that stage is no longer the grand super cycle. It was a grand super cycle here, but now it's in the lesser degree cycle. Now it is in the super cycle because then you have another super cycle, a pullback in COVID, and another super cycle, right? So this is your grand super cycle now, correct? So your question is, this data goes back to 1990, I guess, but you're assuming that nothing this big, and besides, it raised all divergences. So I know that started, the S&P technically, I think they started in the early 1920 something, or in the early, because it was 75 stocks, then they've been increasing it, right? So that's a little confused when you put all together. That doesn't matter. That's irrelevant, Jay, because the biggest impulse is this one, right? And I'm assuming that it goes this way, right? Do you agree? Something like that from the beginning, because as the S&P 500 it started last century, no, in the 1800s. You can Google it out. Started that way. Then it was 75 instrument, I guess. Then they've been increasing in right? Being increasing, right? So eventually, this cycle here is show it's a grand super cycle and it show 5 waves. Everyone agree with me, right? In blue, 1, 2, 3, 4, and 5. Correct? Everyone agree with me in that, right? Those are 5 waves. You see, JJ? Everyone, 5 waves. But at the same time, it's a number 5. So if I get back here, I need to make a decision right here. I need to make a decision eventually. Does the S&P is a 5 waves and a super correction, a crash like we have never seen? Because if 2008 was big, 2008, no, it was started in 2000 and it ended in 2009. It took 9 years in the correction, right? If 2008 was 2008 was big, wave 4 is not typical of a flat, or a flat is not typical of wave 4. No, that's not how it works. Flats can happen, JJ, in wave 2 or in wave 4. It happens. What cannot happen in wave 2 is a triangle. That's the only rule. Wave 2 can be a flat, a WSY, an ABC, whatever, right? So eventually, this looks like a 5 waves. So whoever thinks that the S&P is going to crash, he might have a point. Everyone see it? He might have a point that the S&P is going to crash. Because last time I checked, it looks like a 5. 1, 2, 3, 4, 5. In this case, a flat was the wave 4, right? As JJ is saying. So you got 5 waves there in the S&P within the grand super cycle. 1, 2, 3, 4, 5. It's exactly what the S&P is showing within that super cycle. That super cycle. Right? Everyone? Everyone see my point, right? Everyone see my point. What is a WSY? It's a correct structure, right? Now, no question. It can be a 5 waves, then a crash is coming across the market. Now, this is a nest, as I've been saying to you. This is a JJ, please let me go ahead because we got a seminar. We have to present it. It's an opinion, and I'm not talking about Elliott Wave. You're gonna see, my friend, at the end. This is not just about Elliott Wave. This is something else. You're gonna see it. So eventually there, now, if you look at the S&P, yes, it can be also a nest because it looks good as a 5, right? I can do this also. And the reason is that because there are 5 waves coming off the lows. There are 5 waves there coming off the lows. Everyone, there are 5 waves coming off the lows. Do you guys agree? So if I show you guys the nest over here, 1, 2, 1, 2, 1, 2, who say no that this cannot be the nest also, JJ? Who say no? It can be a nest. Do you guys agree? It can be a nest. Everyone agree with me? It can be a nest. Right? So I'm going to give you guys some tips now. By nature, if you look at the market, I just already explained what is a nest. Right? So if you look at the market and if you look at the 5 waves, I want you guys to look at an angle of the 5 waves. Right? You see, you started here, and every time that the price move, the angle on the wave 5, by nature, it goes like 45 degrees to the peak of wave 3. Yes? Everyone see my point, right? Now, look at the angle here. Now, look at the nest. This angle is more vertical. No, I know the difference. I'm going to tell the difference. This angle is more vertical. This is one of them. The angle of the nest compared to the peak of wave 1 is more vertical right here than if it was a wave 5, right? Because in a wave 5, the market is tired. So the angle of the advance become weaker. So the angle and the price action make the nest my favorite view. That's the case. Now, this is the SPY presented as a nest, right? This is the SPY there presented as a nest. This is the SPY presented as a nest. It's 1, 2, 1, 2, 3, and then another 1. So in this case, the SPY will be over here now, ending the wave 1 or wave 3 that it will put the SPY, let's say within 5, 10 years, the next extension to the upside, it will be around the 654 area. It's going to take years. It won't go there in 2 years. It will take years, even though wave 3s usually very fast. So why we believe that this makes more sense than the one that is blinding everyone is the following. For example, this is the SPY. This is the FTSE from UK, right? And if you look at the FTSE, the grand super cycle, the price action is different than the SPY, but at the same time, what is the direction? The direction is the same, right? Because if I overlay the SPY over here, if I overlay SPY over here in the same chart, guess what? It's the same direction, right? They trend the same side, right? Yes or no? They trade the same side. Everyone see my point, right? If the FTSE goes lower, goes the SPY lower. If the FTSE goes higher, it goes the SPY higher, right? So everyone understand my point, right? So let's play a little here now. Elliott Wave, right? Let's assume, who knows Elliott Wave here? JJ, you understand Elliott Wave, right? Seems like. This is a cycle. This is 2009, correct? Everyone with me. Now, this is a high, a highest low, and a highest high. Now, I want you to look at it at the following. How SPY, the FTSE from UK, is still trading below the peak within the monthly chart of right here, 1997. And I want you to look at it like how this ended with momentum divergency. Everyone? So this is important, correct? Everyone there, JJ, Terry, Benka. This is important because it has divergences at the peak. So it did a flat on the second here. Now, I want you guys to concentrate right here in this cycle within the FTSE. It is 5 waves. There is also divergency here, right? Everyone? Very good, Eduardo. Eduardo is saying that the FTSE from here to here is a diagonal. Why is a diagonal? Because there is overlap, right? There is overlap here. This wave 4 overlap the top. It is 5 swings. 1, 2, 3, 4, 5. But it is overlap. Now, 5 followed by phi with momentum divergency between 1999 and 2000 and lows. Can this be a wave 3? Let's assume that the FTSE makes a new high here. You can say, yeah, there are 5 waves. It cannot be wave 5. This cannot be wave 3. Why? Because wave 3 and Elliott wave never, ever can overlap. You can have overlap in the leading diagonal. You can have overlap in the ending diagonal. Wave 3 of an impulse cannot overlap. And that's what I took time to explain to you guys the rules of the 5 waves impulse. So you guys understand now why the FTSE and the own Elliott wave structure is telling me that the overlap coming from here is telling me that the FTSE is in the process of doing a triple net. Right? 1, 2, 1, 2, 1, 2. Now, a straight question. If I ask you guys, if the FTSE, what you say, my goodness, because you open your eyes, right? If the FTSE right here is nesting and denying the 5-way impulse, what is the SPY? A 5 waves or it is a nest? That's the first answer to most people's question. It's a nest. So everyone understands the FTSE, right? Good, right, great. Now, this is the Hang Seng. Kind of the same. A sequence of high, 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 low, with the one in the middle being corrected, right? This is one market margin. Have you been a member of Herto before? Because for talking that way, you have to be in touch with us at one moment, right? So, right, the angle is key also, Terry. So, right here at the Hang Seng, because you have 1, 2, 3, 4, 5 swing higher, doesn't end in 5. Then the Hang Seng gonna keep and it's nesting also. So when I look at the Hang Seng and related to the SPY, when I look especially at the structure of the FTSE recovery here, I have to point out that the nest is the right count. And that's why we draw those conclusions. Because I'm being honest with you guys, outside of the angle, if you look at the SPY, guess what? You can count it. Because this is something that I always say to members. Elliott Wave always gonna give you what you want. I mean, remember the song, you don't always get what you want, right? No, Elliott Wave is inverse. You always get what you want. If you wanna be blind by the 5 waves, go ahead, you're gonna be blind. And you're gonna make a point, and you can say whatever you want. And you can write a book about it. A super crash is coming. Be on cash. When you don't know, you miss the rally, right? Like I've seen traders telling subscribers or analysts telling subscribers, be on cash. A crash is coming. Be on cash, right? So eventually, doesn't make sense because Elliott Wave is gonna give you what you want. So at this stage over here, I go with the nest. Now, one of the conditions that we have at the beginning was that wave 5 needs to have divergency, correct? Everyone remember that. In an impulse, wave 5 needs to have divergency. Everyone remember that, right? All right, so let me show you that over here. When we were talking about Elliott Wave, we say here that in a 5-way impulse, wave 5 needs to come with momentum divergency. Remember? Everyone? Now, let's get back here to, let's remove the labels for a second, and let's put the RSI. Right? Everyone see the RSI there. Right here, there is divergency. You got a high, you got a low, you got a high, you got a low, you got a high. There is divergency. It can be 5 weeks in the monthly time frame. Look at the yearish chart. This chart, each bar is 5 weeks. Each bar is 5 weeks. Right? Each bar there is 5 weeks. Let's wait a few seconds for the RSI. It takes a little longer to come out in the yearly bar. Right? Allow me one second. You see, now look at the RSI in the years. The currency doesn't have to crash because of this. That's not how it works. Google it. Now, on the other hand, there is no divergency in the year. You see? Which makes it the case that because there is no divergency, it is not 5 weeks. Right? Because there is no divergency, there is no 5 weeks. But it has to show it. It has to show it. Tariq, you have to show it. Right? You have to show it. Right? So, right here, the way I look at it over here, the way I look at it over here, the way I look at it over here, the market ain't gonna put back enough to the end of the year, because I want you to look at this, Karim. You see over here, right? You see over here, all this 2019 comes with momentum divergency here. You see that? You see that, Karim? This height here, it comes with the momentum divergency. Look. You see it? So, now you see it. So, in the year, it always good and it gives divergency, right? In a year, it also provide divergency, right? So, the idea that it makes the net the favor view is that there is no divergency in the yearly also. Because, yes, you can have divergency here, like it is, but in order for this to qualify for the 5-week imports, then in order for this to qualify for a 5-week imports, it needs to show divergency in every single time frame. So if you look at this combination of 4 and 5 here, it shows divergency right here on the quarterly. Also show divergency there on the yearly here. And of course, it's gonna show divergency at that stage and every single time frame lower, right? And every single time frame, this is the weekly, but then look at the divergency. This is the monthly, look at the divergency, but then here, you see? So, the other side also is saying that there is, then you have the angle, the market correlation with the FTSE and the Hang Seng. And then you have the RSI needs to show also divergence, which is not the case. So you have three ways pointing into the net. Now, let's use now a little bit of critical thinking, because that's one thing that I always like to do, right? Which is critical thinking. Right? Is critical thinking. So let's put it this way. If you guys recall, maybe some of you guys were present when we did the seminar in the middle of, this is real. Back in 2020, we have one of these seminars scheduled. And at that stage, we didn't know about COVID. We knew that the market was about to pull back because of the 5 waves with divergence being here. I can even show you the charts, which are very nice to see, honestly speaking. I think I have it someplace. They're very nice to see. And we were telling members back then that the market going to pull back, right? And indeed, it pulled back. And we did the seminar, and using, because a trader, you need to have critical thinking also as part of your system, right? Because things can look one way and being another. And sometimes the critical thinking is the one telling you guys what it is, right? So I recall back then, in the middle of the COVID putback, telling members, right, the same thing that I'm saying today. This COVID putback is an opportunity to buy the indices, right? Many people don't believe about that, but the market using the same technique that we're using right now, it proved me right? Anyone here was at that stage in that seminar? Anyone? This was the chart presented to members on April 2019. You was there, Carrie, right? Look at the date, April 2019. SPY was trading at 2286. We say about 340 is going to put back to 240. April 2019, S&P was here. We say 340, it reached 336, it put back to 240, reached 227. It can get better than that, right? And right here, we were telling members to buy the index, right? To buy the indices, because we knew that at least by then, a wave 5 is coming. Now, there is a concept that is called critical thinking, right? And we use it a lot, right? And many of you guys do not understand. Many of you guys do not understand, in some ways, the concept, right? Which is that you have to understand that everything needs to make sense. Now, for example, this is the transportation sector. Technically, it's the same structure. 2000, 2009, 5 ways out. Look at that angle. Look at that angle. Look at that, right? I keep saying that this is not the end of the world. Thank you for remembering that. So the transportation sector put back into the blue box and look at that angle right there within the transportation sector. Look at the divergence from here. So within the transportation sector, you get the airlines, right? American Airlines, right there. American Airlines. Now, I know that a company can go bankrupt, right? I know that a company can go bankrupt, no zero, and have zero value, exactly. But that one company, but honestly, no sector, right? No sector, right? So, like I say, many people don't realize this. For example, back in 2009, many waivers, they were calling this. They were calling. They got blinded by the 5 weeks here, and they were calling a putback here. Right? So back then, the market is something that we call running out of room, right? Running out of room. And then what it means running out of room, I mean for that the reason why the S&P didn't do this is because at that stage, American was here. This is the decline. American didn't have room unless it goes out of business to make another leg of that magnitude, right? That's American. Everyone understand the point, right? Everyone understand the point. In other words, if a super crash happened on the S&P, I guess America goes out of business, right? I guess American goes out of business. If a super crash happened, right? Running out of room. Yes, that's how we develop that. That's how we call it, right? That's how we call it, running out of room. Nowadays, we don't have enough room. No, we don't. We don't have rooms. Because a crash in the S&P from 476 all the way to 200, which is the 50% decline from zero to current price, 236, you don't have room right here, right? You don't have room. You understand? You don't have room. Now, this is Southwest. It has rooms, correct? Southwest does have rooms because Southwest can do a double. So let's analyze in Southwest this advance. And if this advance comes to be in 5 weeks, what happened? 1, 2, 3, 4, and 5, followed by 3 to the blue box right there, followed by 3 to the blue box. I remember in that seminar, I was telling followers to buy the American Airlines and the airlines right here. I remember that. So Southwest is a 5 followed by 3. If this proves to be a 5, what does Elliott Wave is suggesting then? That if 5 followed by 3 comes with another 5, and you look at the charts of Elliott Wave, is 5 followed by 3 and another 5, what happened? What is the ruling side? The upside or the downside? Is the upside, correct? Eduardo, Karit, all you guys there, Terry, is the upside, right? So let's see Southwest coming out of the B wave right here, right? And when we look at that advance right there, we have 1, 2, 3, 4, 5. That makes one red. Then 1, 2, 3, 4, 5. That makes 3 red. 4 and a 5. With divergency in the last lead right there over here. This is the weekly chart. I think that if you downgrade it a little bit, you have your divergence in momentum divergence here. Same here, right? So it's a very nice subdivision. Let me correct the chart here. It's a very nice subdivision. Right there. You can put it here. You can put the 4. So I want to ask you guys, if you're going to label this, how do you consider in this? You're considering this as 5 weeks with an impulse, right? Look at the divergences in there. Right? It's 5 weeks there, right? Everyone see that, right? It looks like a 5 weeks. So if we get back to the highest degree time frame, right here, 1, 2, and 1. So the outside rule. So when I apply the running out of room of American, the 5 followed by 3, followed by 5 in American, and Southwest right there. When I apply the previous concept with the FTSE, the Hansen, and on and on and on, I need to keep favoring the outside, right? Now, someone mentioned early, right? Someone mentioned early the currencies. A lot of divergency mean nesting most of the time. Very good, Terry. So someone mentioned the currencies, right? Now, we get back to the SPY here, right? And we put the nest. This is the 5 weeks again. And in the 5 weeks, right here, if this is going to happen, I'm going to ask you, what do you guys think that the yen as a currency will do? The yen as a currency will do? It will crash, it will be weak, or it will be sideways? The yen as a currency, it will do. Any guess? Applying here the currencies to the market. If the market crash, the yen got strong, right? The yen got strong. And the yen pairs will get weak. Very good, Frederick. Very good, Islam. And Terry, right? Now, for example, let's use any yen cross, anyone. And we're going to put it in top of the SPY. This is the CAD yen, right? And let me put it here together. It's the same trend, right, guys? It is the same trend. You guys agree? It is the same trend. They trade the same side. Because if you look at it, from here, both rally. From here, both rally in second degree. Both rally. They crash. They trade the same side, right? Everyone see it? They trade the same side. Let me do something for you guys here. So you guys see it. If we remove the labels, they're trading the same side, right? Thank you, Guret. So I would say this: the CAD-Yen, if the S&P is going to have a super crash, the CAD-Yen here, it would drop to around to make it double from here. Do you guys really think that the yen, CAD-Yen, is gonna trade at 50.25? And the CAD-Yen has room. It's one of them that it has room. Now, let me change the CAD-Yen right here. And let's put, for example, the SEC-Yen, right? Right. Do you think that in a super crash, the SEC-Yen, this is the zero line in the SEC-Yen? 1 second. This is the SEC against the yen. Because we cover a lot of instruments, and consequently, we have an optical view of the market, which is very expanded, William and Terry, which is expanded. That's the key, understanding the critical thinking, right? This is right here, the monthly chart of the SEC-Yen. It's a yen cross. If the indices crash, it's going to trade lower. It's a yen cross. It's a yen cross, right? So the point being is this, that this is zero, right? This is zero below here. I don't see this happening because it's too much yen strain. For example, we get back to the same way here with the lines, and we're gonna do here and put the dollar yen, right? The dollar yen. I don't think that the Bank of Japan want the dollar yen here to trade below 73 any longer. Everyone see my point? You see what I'm saying, right? So the critical thinking is telling me that currencies are pointing to the next also, because they need to breathe. And the way, because no question asked, that if you take a look at, for example, a chart of, let's say, any yen cross, right? The euro yen, for example, right here, the main trend in the euro yen, this is the low that ended the cycle of the correction. It did an impulse here, a pullback, another impulse, a pullback. Every reaction is in 5. But guys, this is the bottom line. This is the zero line here. Now, the euro yen in the quarterly chart, it looks sideways to higher. It gives you a higher high, a higher low, a lower high, a higher high, and a higher high, right there. But in the other hand, if I put the euro dollar, which is the same as the euro yen, the euro dollar is bullish. It's bullish. The euro dollar right there is bullish. And it's showing 5 swing from the lows. right? It is showing 5 swing from the lows. It's showing 1, 2, 3, 4, and 5 followed by 3. So the euro dollar trend is higher. If the euro dollar goes higher, what do you think that the euro yen will do? Higher. And if the euro yen follows the euro dollar and it goes high, that means yen weakness. And if there is yen weakness and the yen crosses are running out of space, is the next. So overall, honestly, indeed, Hector, indeed. You know my phrases. Yeah, indeed. So I will put it in conclusion for you guys here. The way I look at it is the following. That the market is not about Elliott Wave. That the market is not about SPY, S&P, or that in one instrument in particular, right? We in Elliott Wave Forecast has developed this system that you guys has understand something out of that right now, in which we always follow to make a decision the instrument that is showing me what we call an incomplete sequence. In this case, the FTSE, right? The Hang Seng. Because the incomplete sequence are showing and they are saying that there should be continuation. A sequence is either 5913 when it's in pause or 3711 when it's corrected. Now, in order to get to 7, you pass by 5 and you have a 6. In order to get to 9, you pass by 6, 7, and 9. So technically, we have developed a system of trading in which we always trade incomplete sequences with the trend, because the trend is created by an incomplete sequence. So I can give what I cannot get what I want. I need to follow what it is, right? And when I look at right here, when I look at right here, when I look at right here at the market with the eyes, with no bias, because the thing is this, you cannot have a bias as a trader. You need to have critical thinking, an open set of mind, and not get blinded by the market, right? So we have created this sequence, this system, in which, for me, SPY doesn't say anything. If I want to have a 5 in the SPY, I get a 5. If I want to have a 3, an S, I get an S. Everyone see my point, right, Terry? Everyone see what I'm trying to say. SPY is going to give me whatever I want. Right? Because that's what Elliott Wave is. That's what Elliott Wave gets so bad reputation. Because it can give a seminar, it can give, let's put it this way, it can give the trader whatever the trader wants. If the trader want to see 5 waves, you see 5 waves. If the trader want to see 3, you get 3 waves. You get what you want, right? Now, we don't look at the S&P or SPY at this stage as an indicator of the market. Yeah, I can make the case that there is no divergency, should be the next. There is the angle of the last rally from March of 2020 is very vertical, supporting the next. I can make those points, and they are all valid points, right? Now, we, in Elliott Wave Forecast, like I say, we scan the market. We cover 78 instruments in the daily basis. which cover a lot of commodities, a lot of Forex, a lot of stocks, a lot of ETF, a lot of indices, right? And we always scanning the market, right? And our members got the feeling of what's coming, but they also know, listen, if this is this, then it's this, but the right side won't get affected. Things of that nature. We make them understand the market. So I said, Elliott Wave, S&P can be whatever I want, but our own system, seeing the FTSE, seeing the Hamstone, seeing the RSI divergence, that has nothing to do with Elliott Wave. Seeing the RSI divergence, noticing the angle of the wave, correlating with American Airlines, seeing how Southwest Airlines did 5, 3, and followed by 5, seeing the currencies, seeing how the euro has 5 ways out and 3 ways put back, right? We can draw a conclusion that the path that makes more sense is the next. And I hope you guys, I hope you guys understand, right? And I hope you guys understand where we're coming from, right? I hope you guys understand where you're coming from. Or I have this comment about that they understand the room. I agree with you, but oil is different. You trading future contracts, right? Right? And that's different. This is not future contracts. This is the price. American Airlines today worth 20, right? It's different. So I have another questions. Now we're gonna get to the point in which you guys might start asking questions. For us, it's very clear. Until the market breaks this low, or the distribution system, Jason, in our system, break these lows, we favoring the next. And besides that, guys, it's a common sense also. No matter what is going to happen in the market, within the next quarter or so, the market is going to end the cycle from March 2020, which is the one that you see there, in this case, 2 in red. No matter what happens, that cycle will be ending in the next few months. Because like I said at one point today, nothing runs forever. Nothing lasts forever. So the market at one point, it will end. Now, there is a concept that we use a lot, which is called the Elliott Wave edging. Right, Jason? Elliott Wave edging. After 5, right? Always come 3, right? Now, like I say here, when the S&P was here, I do recall myself when the S&P was around here, and it took the higher say the S&P goes to 22 and change, right? You don't know the entry. A lot of questions. You don't know that on our members gonna receive the blue box, right? Because that's how we trade. But you don't know this level until you finish this level, this cycle. So eventually, no matter what happens, if a nest or it is a crash, there's gonna be a period and which the market will put back. That's called the Elliott Wave hedging, right? And a professional trader won't sell the S&P or sell the SPY. A professional trader is gonna find ways to buy instruments that they're gonna rally when this put back, especially, for example, gold and silver, or buying the 10 years note. That's how we trade in Elliott Wave forecast. We don't pick the market, Jason. So no matter what, this is going to put back soon and finish this cycle, and keep an eye in that channel there. But I want to remember to you guys, usually in a way, in a nest, you have to be aggressive, because if it's a nest, we are right here. We are technically right here. You see that this is more shadow than this one, and this one more shadow than this one. This is done on purpose. And the reason that we draw it that way is to make you guys understand that, the 10 years support the nest also, yes. Make you guys understand that the most that it nest, the shadow the wave 2 is. So if it's a nest, don't expect too much pullback, just a break of the cycles and then higher. There are instruments already, for example, like Southwest, which already ended that cycle. Right here. It's the same cycle. This is March 2020. Right? So we use a lot of technique to be able to catch the market in the right side. I think it was Frederick, if I don't recall. He asked me a question early in the session. If you want to type it or copy and paste it here, I will. There you go. You have it there. All right. This is what Freddie is. Let me send it to everyone. Right? So everyone is able to see it. Right? He's asking there, dear Eric, thank you for your seminar. I really appreciate it. There are 2-3 points to prevent me to subscribe to your service. Will you mind giving me an explanation what I understand that the blue box is for entry and stop. Yes. But how you take profit is very simple. You take profit because in the next extension, Frederick. Right? In other words, for example, let's say that this is, I'm going to use Southwest, right? Bear with me. I'm going to use Southwest here, right? I'm going to use Southwest. Let's say that Southwest now goes higher. Let's assume and retest the high to the 76.4. And Southwest, then from there, this is our blue box 16. It goes lower to a buying area right here. Correct? You follow me, right? The question that you have is, when do you take profit from here? You need to upgrade the time frame. And the next time frame is on the daily. This is a daily, and then let's say that it goes here. So if this is an ABC, like I always tell members, each trader needs to know the identity of what you are. You are a swing trader, an intraday trader. I personally only trade dailies and weekly and monthlies. I'm not in a hurry to take profit, right? I am not in the hurry to take profit. So personally, because I believe that the path to become rich in trading is holding positions. That's what I believe. That's the way I am. So let's say that you buy it here, you're gonna take the previous rally, and then you're gonna take profit over here at the equal X from this blue box. That answer your question? You buying on the daily, you take profit in the higher degree on the weekly, equal X. Now, he also add there that he live in the Eurozone, because we cover the future. And if you live in Europe, the ES is a future contract. It's future. The same with NASDAQ. So technically, we're going to be updating the Elliott Wave counts. We update the counts 4 times a day, right? We update the count sometimes 4 times a day. We update it in New York, Asia, London, midday New York, and early New York. Now, you're asking that if you live in Europe, how you trade Aussie gold euro. Well, that's, I don't know. I mean, it's the same direction most of the time. We don't cover gold against the euro. We look at it to get a hint, but we don't cover it, right? So that I don't have any. I mean, you can trade gold against the dollar. We got clients all around the world, and technically they trade gold dollar right there. I won't cover any instrument, guys, that is not part of the seminar as a respect to the membership. I'm sorry, I cannot do that. I cannot cover any instrument as a respect to the membership. Right? I know that I'm different, right, Ken? I know. But I guess that you know now why we are different. I know that everyone is calling for the crash. Don't you agree? Ken? Everyone is calling for the crash. That's the way it is. Let's see. I'm up to the challenge. I'm not afraid. Right? I'm not afraid. It's the same, Frederick. Yes, it's the same. It's the same. It's the same. That doesn't affect the euro dollar pair. Right? So I guess that everyone here understand our point of view. First, that we're different than most. Most people just go blindly 1, 2, 3, 4, 5. That's all they do. 1, 2, 3, 4, 5, A, B, C. The way, I mean, so many concepts that I don't get it, but I cannot be a follower. I cannot follow to the tip something that was developed in a great way, in a genius way in 1930s. I need to improve it. And that's what we have done since 2005. Second, because we are different, we have a different technique that it goes with the other side, upgrading, downgrading, to prove that the SPY doesn't have divergency. The angle of the wave 5, right there, also seeing how the relationship of the SPY is with currency, with the stocks, with another world indices like the FTSE, the Hang Seng. And we draw the conclusion, after all, that as a trader, I will give you a shot to the next. I had nothing to lose. I can know, let me see, a bunch of questions because there is hundreds and hundreds of people here. One second. Right? So I start with Rob. Okay, no crash by more than side likely. Short time frames, I cannot cover, guys. We offer a trial. You want to see an opinion? Nothing to lose. You can take the trials. I mean, remember, put your shoes in somebody else that paid for this. You take the trial right here. $9.99. That's no big deal. That's a hamburger, a Coke, and a fry. Put it that way. So eventually, uh, that's how I see it there. Let me keep answer questions right here. For sure, we will correlation and a good one. It will be a pullback, a correction, Carrie. It will be a pullback. If this will be recording, yes, and it's gonna be posted in the homepage of our site and our YouTube channel. Do you follow the Brazilian market? Yes, we look at the index there. I'm looking one more time, one more dimension, time. We have a system. This is the question. We have a system of time also. The way that we develop the system of time, Anscott, is that we use what is called the critical thinking. In other words, we have a rotation system of time. Like we taught today in our live station to members, what should be happening next week based on time, right? Because remember, these are computers trading. And as the computers, they buy, they take profit, they buy, they take profit, they buy, they sell, they take profit. So next week should be a very interesting week based on time. So we have a 13-day rotation system there. That might help you that the concept of running out of room as well. Nobody used that concept, Eduardo. You think that we have bottom in the S&P or Nasdaq based on the Elliott Wave technicals? We know what we like. We know what we like. AG, our opinions is inside members area. Does the next looks possible? I guess you say possible in the last quarter too. I guess so, yeah. Terry say, I think we see 5 weeks with divergence in 4 hours, then unless there is divergence in the one. Most likely, that's the idea. You need to upgrade and downgrade, Terry. If you're looking at the daily, 5 weeks, everything below needs to have divergence. If you look at the 4-hour cycle, everything below needs to have divergence. What do you think about the dollar? Again, is inside the membership area. So again, guys, I hope you guys enjoy it. It's been 2 hours. More questions. 1 second. Always extensions. The question is, if we use extension retracement or low charts, always extensions. Thank you, Roman. And like I said, guys, we are not God. We are not have the Holy Grail. We are just have a group of people, 13 to be exact, that we look at the market different. We don't look at Elliott Wave as a pure orthodox Elliott Wave. We play a lot of edging, but we always trade the right side, and we have an open mind. Our great advantage is the open mind and knowing when to enter the market and knowing when to get a reaction. Keep this in mind. The market always a fight between sellers and buyers. And you don't move the market, neither do you guys move the market most likely. The only advantage that you have is to enter the market when they are not fighting. And those are the blue boxes, Frederick. Those are the blue boxes. Areas in which they are not fighting the sellers on the market. Areas in which, boom, you entered and one side give up because take profit and the other believes that it's going to win, right? That's when we entered. And we have cash, thousands and thousands of, that's how we do for living. It's like you can go around, you say, gosh, look at the transportation sector. Look at the blue box. Boom. You go American. I remember me saying to you guys in the middle of COVID to buy American at the Ecolex here. I think it was a little bit higher right here. I say 1321. You can see the recording, right? I don't understand what you say, Terry, there, what you asking. So that's how we are, right? That's how we are. I want to give you something as a tip today at the end here. This is very interesting. I don't know if you guys have noticed this, but this is very interesting. Look at the SPY here. Exact to the peak. For those that like time, we have a lot of profit. Thank God. Right here, last year the S&P peaked on September the 2nd, and it was correcting onto October the 30th. This year peaked on September the 2nd, so keep that in mind for the weekend. We use all these techniques, all these little things to forecast the market. You're asking about profit. This is our performance page, right? Last year, we make about 152% profit. This year, I think that we started here around 41 points, 41,000. The peak here around 63. Right now, they are around 54. So like 34% so far this year, which they got a trade here, a big stop in a weekly trade, something right there. But that's the life of trading. You ain't gonna win at all, right? As far as you control your risk, you're good. But we do very good in the performance also. All right, guys. So that's it for today. I hope you guys enjoyed the seminar. Open your mind. Nobody knows the truth. It's just knowing how to trade. That's what it is all about it. Knowing how to trade, right? And you have nothing to lose to considering the nest. Because nest or no nest, this is what I want you to get to the weekend. Nest or no nest, there's going to be a period soon in which in the nest, put back. In the 5 weights, put back. So this period up to here, the only difference, it will be this. Thank you, AJ. I'm just a regular Joe, just that I love this. This is the only difference. So I will know when we get here which one is for sure the scenario. But because I know that no matter which one is, the market will do this here, the market will do this here. No matter what it is, it's the same. Why I'm going to be calling a crash? Does it make sense? Why I'm going to go against the trend? Why? Somebody mentioned a few names, famous names also. Elliott, they were calling a crash here because they went against the trend. Look about this area here is called Elliott Wave edging. Is the same in the nest that in the 5 weeks. So you better buy here. That's all I'm saying. When the time will come. Any question, guys? Any other question? Thank you guys all for being here. If you like what you saw, I just invite you guys. Go to the homepage, Elliott Wave Podcast. You're gonna learn something different every single day. Take the trial. A lot of seminars also that we're selling here about these concepts in the page here. You see a lot of seminars that you guys will learn a lot if you want to. So thank you all for being here today. Have a nice weekend all. Thank you guys all.